What if I told you that $1,000 could change your entire perspective on investing? Back in 2019, I took what seemed like a crazy gamble at the time. I invested exactly $1,000 in Tesla stock. Today, I'm going to share what happened to that investment, and more importantly, what it taught me about the wild world of stock market investing. Let's rewind to January 2019. Tesla's stock was trading at around $60 per share after adjusting for splits. The company was burning through cash, Elon Musk was making headlines for all the wrong reasons, and skeptics were predicting Tesla's imminent downfall. But something about the company's vision and potential caught my attention. My $1,000 bought me roughly 16 shares. Friends called me crazy. Financial news outlets were publishing article after article about Tesla's supposed inevitable bankruptcy. But I had done my homework. I saw how Tesla wasn't just a car company, it was a technology company, an energy company, and a battery company all rolled into one. The first few months were a roller coaster. My investment dropped by 30% within weeks. I watched my $1,000 shrink to just $700, but instead of panicking and selling, I remembered why I invested in the first place. Tesla was delivering more cars each quarter, expanding its product line and building new factories. Then 2020 hit, and everything changed. Tesla's stock began an astronomical rise that nobody could have predicted. My $1,000 investment grew to $3,000, then $5,000, then $10,000. By the end of 2020, my initial investment had multiplied to over $15,000. It felt surreal watching those numbers climb day after day. But here's what most people don't tell you about investing: holding onto a winning investment is harder than picking one. As Tesla's stock soared, the voices telling me to sell grew louder. Take your profits, they said. This is a bubble, they warned. Some days I was tempted to sell everything. Instead, I sold just enough to recover my initial investment plus a small profit. This way, I could let the rest ride without emotional attachment. It's a strategy I learned the hard way. Never risk more than you can afford to lose, and always protect your initial capital when possible. The Tesla investment taught me crucial lessons about the stock market. First, the market is often wrong about innovative companies. Second, short-term price movements mean nothing compared to long-term business performance. Third, and most importantly, successful investing requires patience and strong conviction in your research. Today, Tesla's stock price has seen multiple ups and downs, but my remaining investment is still worth several times my initial $1,000. But this isn't about bragging rights. It's about understanding that successful investing isn't about getting lucky with one stock. It's about research, patience, and managing your emotions. Looking back, I realized that my Tesla investment worked out because I focused on the company's fundamentals rather than daily stock prices. I saw Tesla's potential to transform multiple industries, from automotive to energy storage. I understood their technological advantages and market position. Would I recommend everyone invest in Tesla today? Not necessarily. Every investment decision depends on your research, risk tolerance, and market conditions. The stock that made sense at $60 might not make sense at its current price. The key is finding opportunities that match your investment thesis and risk tolerance. Remember, this isn't just a story about Tesla or making money in the stock market. It's about the power of believing in innovation, doing thorough research, and having the courage to invest despite market negativity. Sometimes, the best investments are the ones that everyone else thinks are crazy, but only if you've done your homework and understand exactly why you're investing.